Bitcoin's roller coaster ride, a 24-hour snapshot. Bitcoin, the world's most famous cryptocurrency, has been on a wild ride over the past 24 hours. The digital currency, known for its unpredictable nature, has once again demonstrated why it captures the attention of investors and traders worldwide. Prices surged to a peak of insert recent peak price, only to plummet to insert recent low price just hours later. This rapid rise and fall have left many market participants on edge, constantly refreshing their screens to keep up with the latest developments. This dramatic fluctuation is not unusual for Bitcoin, which is known for its volatility. The cryptocurrency market operates 24/7, meaning that price changes can happen at any time, often influenced by global events and market sentiment. This volatility can be both exhilarating and terrifying for investors. For some, the thrill of potential high returns is worth the risk, while for others, the fear of significant losses can be overwhelming. Those who bought at the peak are likely feeling the sting of the drop, while those who bought low and sold high are celebrating their profits. The market's unpredictability means that fortunes can be made or lost in a matter of hours. But what caused this latest price swing? The reasons behind Bitcoin's price movements are often complex and multifaceted. Understanding Bitcoin's price movements requires understanding the complex interplay of factors that influence its value. These can include regulatory news, technological advancements, macroeconomic trends, and even tweets from influential figures. From news events to market sentiment, a myriad of forces can send Bitcoin's price soaring or plummeting. Social media buzz, geopolitical events, and changes in investor behavior all play a role in shaping the market. Let's delve into the factors that have contributed to Bitcoin's recent roller coaster ride. By examining these elements, we can gain a better understanding of what drives this digital currency and what might be in store for its future. Decoding the Bitcoin buzz. What is it anyway? Before we dive into the intricacies of Bitcoin's price fluctuations, let's take a step back and understand what Bitcoin actually is. In simple terms, Bitcoin is a digital currency, which means it exists only electronically. Unlike traditional currencies issued by governments, Bitcoin operates on a decentralized network called a blockchain. This blockchain is like a public ledger that records all Bitcoin transactions. It's maintained by a network of computers around the world, making it incredibly secure and transparent. Because Bitcoin is decentralized, it's not subject to the same controls as traditional currencies. This makes it attractive to some investors, but also contributes to its volatility. The price is right? Not always. Understanding Bitcoin's volatility. Bitcoin, the pioneering cryptocurrency, has captured the imagination of investors worldwide. But with great potential comes great volatility. Bitcoin's price is determined by supply and demand, just like any other asset. However, the dynamics of this market are unique and often unpredictable. Because Bitcoin is still a relatively new and niche market, its price is easily influenced by even small changes in sentiment. This can lead to rapid and sometimes extreme price swings. When demand for Bitcoin is high and supply is limited, the price goes up. This is often driven by positive news, increased adoption, or speculative trading. Conversely, when demand wanes or there's a large sell-off, the price drops. Negative news, regulatory crackdowns, or market corrections can trigger these declines. This sensitivity to market sentiment is what makes Bitcoin so volatile. The market reacts quickly to any perceived changes, making it a roller coaster ride for investors. Factors that can impact demand for Bitcoin include news events, government regulations, technological advancements, and even the tweets of influential figures. A single tweet from a high-profile individual can send prices soaring or plummeting. Understanding these factors is key to navigating the turbulent waters of Bitcoin trading. By staying informed and aware of the market's pulse, traders can better manage the risks and opportunities that come with Bitcoin's volatility. Riding the wave factors influencing Bitcoin's price swings. So what were the specific factors that contributed to Bitcoin's wild ride over the past 24 hours? While it's impossible to pinpoint every single influence, several key factors likely played a role. One possibility is news related to government regulations. Governments around the world are grappling with how to regulate cryptocurrencies, and any announcements regarding new regulations or crackdowns can send shockwaves through the market. Another factor could be market sentiment driven by social media. A single tweet from a prominent figure like Elon Musk can send Bitcoin's price soaring or plummeting. Similarly, positive or negative news coverage in the media can also influence investor sentiment. Section 5. Musk tweets, China whispers, news and Bitcoin's dance. The world of Bitcoin is incredibly sensitive to news and information, particularly from influential figures and governments. Every tweet, statement, or policy change can send ripples through the market, causing significant price fluctuations. Elon Musk, the CEO of Tesla and SpaceX, has become somewhat of an unofficial spokesperson for Bitcoin, despite his own company's fluctuating stance on the cryptocurrency. His influence is so profound that a single tweet can lead to massive buying or selling sprees. When Musk tweets positively about Bitcoin, the price often surges as investors flock to buy in. His tweets can create a sense of optimism and excitement, driving up demand and, consequently, the price. Conversely, negative comments from Musk or announcements like Tesla suspending Bitcoin payments can send the price tumbling. These negative signals can cause panic among investors, leading to a rapid sell-off and a sharp decline in Bitcoin's value. Similarly, news from China, a country that has historically been both a major player in and a strict regulator of the cryptocurrency market, can also trigger price swings. China's regulatory stance on Bitcoin and other cryptocurrencies is closely watched by investors worldwide. Announcements of new restrictions or crackdowns on Bitcoin in China often lead to market dips. The fear of increased regulation or outright bans can cause uncertainty and anxiety, prompting investors to sell off their holdings to avoid potential losses. This reaction underscores the delicate balance between market sentiment and regulatory news in the world of Bitcoin. Section 6. The whales in the water. Big players, big impact. While individual investors can certainly influence the price of Bitcoin, it's important to remember that large institutional investors, often referred to as whales, can have an even greater impact. These whales are entities like hedge funds, investment firms, and even some governments that hold significant amounts of Bitcoin. When a whale decides to buy or sell a large amount of Bitcoin, it can create a ripple effect throughout the market, causing the price to move significantly. This is why it's important for investors to pay attention to news and analysis that might indicate whale activity. Section 7. Regulation rumblings, governments and the future of Bitcoin. Governments around the world are still trying to figure out how to deal with Bitcoin and other cryptocurrencies. Some see it as a threat to their monetary sovereignty, while others see it as an opportunity for innovation and growth. The regulatory landscape for Bitcoin is constantly evolving, and any new regulations or crackdowns can have a significant impact on its price. For example, China's recent crackdown on cryptocurrency mining and trading sent shockwaves through the market, causing a significant price drop. Section 8. To invest or not. Weighing the risks and rewards. So, should you invest in Bitcoin? The answer, as with most investment decisions, is it depends. Bitcoin can be a highly lucrative investment, but it's also incredibly risky. Before investing in Bitcoin, it's crucial to do your research, understand the risks involved, and only invest what you can afford to lose. It's also important to have a clear investment strategy and to be prepared for the volatility that comes with the territory. Section 9. Beyond the hype. Bitcoin's potential impact. Beyond its use as an investment asset, Bitcoin has the potential to revolutionize the way we think about and use money. Its decentralized nature and secure blockchain technology offer a number of advantages over traditional financial systems. For example, Bitcoin can facilitate faster and cheaper cross-border payments, provide financial services to the unbanked, and increase transparency and security in financial transactions. While it's still early days for Bitcoin, its potential impact on the world should not be underestimated. Section 10. Buckle up, it's going to be a bumpy ride. Bitcoin's uncertain future. Bitcoin's future is uncertain. Will it become a mainstream currency, a widely accepted store of value, or simply a niche investment for risk takers? Only time will tell. One thing is for sure, Bitcoin's journey will continue to be a wild ride. Its price will likely continue to fluctuate wildly, influenced by a complex interplay of factors. Investors and observers alike should buckle up and prepare for the long haul.